What if the absolute best way to win in the stock market was to focus on not losing? Today, we're going to dig into how a group of students put that exact theory to the test in a pretty high-stakes investment competition. And honestly, their journey might just change how you think about investing. For so many people, the stock market feels like a giant casino, right? Just a game of pure luck. So how do you actually separate smart strategy from just, gambling? That's the exact question these students wanted to answer. And believe me, their solution is surprisingly powerful.
Okay, so it all started with a challenge, the Bursa marketplace investment game. You can basically think of it as a flight simulator, but for investors. All the thrills, none of the real-world financial crashes.
And no, this was not about hitting the books. The real mission here was to take all that classroom theory and throw it into the deep end to see if it could actually survive the bulls and bears of a real market. Well, a simulation of one, on the main Malaysian stock exchange.
Now, what's super interesting are their goals. I mean, look at this list. Make a boatload of money is nowhere near the top. Instead, it's all about getting real experience, building something stable, and, this is the big one, minimizing losses and mastering risk. They were playing defense, which, let me tell you, is a total pro move.
So how did they do it? What was the master plan? Well, they definitely didn't just wing it. Nope. They built their whole strategy around this really elegant three-part philosophy: method, money, and mind.
And this wasn't something they just made up on the spot. Their strategy was grounded in a legit system, a framework called Pajang Saham. This gave them a solid structure right from the get-go, which is huge for taking emotion and guesswork out of the equation.
And I love how simple this framework is. You've got method, money, and mind. So step 1, method. That means have a clear strategy. Step 2, money. You've got to use proper capital management. And step 3, mind. This is maybe the hardest one. Keep your emotions in check. These 3 pillars, they were the foundation for every single move they made.
All right, so let's get into the nitty-gritty. How did this big-picture philosophy actually translate into a day-to-day strategy? This is where the rubber really meets the road. Okay, so their first filter was all about finding quality companies. They used what's called fundamental analysis to sniff out financially strong, healthy businesses. And their rule was dead simple. They would only even consider companies with a return on equity, or ROE, over 10%. Basically, this made sure they were only dealing with businesses that were actually profitable and well-run.
But, a great company isn't always a great stock to buy right this second. And that's where their second filter, technical analysis, came into play. For this, they looked at market data, things like price and volume, using tools like moving averages and the RSI. The RSI, or Relative Strength Index, just helps you see if a stock is getting hot or cold. It's all about time.
And this slide just sums it up perfectly. Think of them as 2 sides of the same coin. Your fundamental analysis, that's what tells you what to buy. It's focused on the company's health. But then, your technical analysis tells you when to buy, by looking at the market's mood. You really need both to make a smart decision. So all of this analysis boiled down to a super clear, super powerful rulebook. And look how specific they were. They had clear entry points, but more importantly, and this is so crucial, they knew their exit plan before they even got into a trade. They'd take profits at a 5 to 10% gain, and they'd cut their losses, no questions asked, at 3 to 5%, no hesitation, just pure, cold discipline. And if that wasn't enough, they added 3 more core rules just for managing risk. Rule number 1, never put more than 20 to 30% of your total money into a single stock. Don't put all your eggs in one basket, right? Rule 2, always keep a cash reserve of 10 to 20%. You need that dry powder. And rule 3, this is the golden one. Only get into a trade if the potential reward is at least twice the potential risk. That's a huge one.
Okay, so they've got the framework, they've got the strategy, they've got the rules. It all sounds great on paper, right? But the real question is, how did it actually perform when the pressure was on? All right, this is it, the moment of truth. After all that planning, all that discipline, did their master plan actually work? Did they crush it? And the final result is a loss. A tiny one, yeah, just under 21 ringgit. Now, I know what you're thinking. A loss, so the whole thing was a failure? But hold on, don't jump to conclusions just yet.
Because here's the piece of information that changes absolutely everything. They finished 16th out of all the competing groups. Think about that. In a crazy volatile market where you can bet other teams are gambling big and losing even bigger, these students basically broke even. They saved their cap.
So yeah, the big takeaway here has nothing to do with that 20 ringgit loss. It's the proof, the absolute proof that their strategy did exactly what it was designed to do: manage risk and protect their money. And let me tell you, in the world of investing, surviving to fight another day, that's a massive, massive win.
All right, so this brings us to the real gold, right? The ultimate lesson. What can we all take away from what these students went through?
You see, the real win here wasn't about making a profit. It was the experience. I mean, the invaluable experience of building the system from scratch, having the discipline to stick with it when things get crazy, and then seeing it work perfectly, seeing it protect you from a total wipeout.
So what are the big lessons for all of us? It's pretty clear. 1, you need a clear method, because that's what keeps your emotions from running the show. 2, strict risk management is everything. It's how you survive. 3, discipline is way more important than trying to predict the future. And 4, don't go it alone. Working with a team, sharing your research, that can lead to way better decisions.
So I'll just leave you with this question to chew on. When it comes to investing, is the biggest win not about hitting a home run, but just learning how not to lose? Really makes you think, doesn't it?